Welcome back to Rockstock Channel. It is Thursday, February 20th, and we are back here with an update with Atlantic Lithium CEO Keith Muller. We've interviewed your colleagues, Keith, Neil Herbert and Amanda Harsas, a number of times in recent months, but I was looking back. It's been about 18 months since we've heard directly from you, and a lot has happened in that time frame, not much of which has been very good for the lithium market or Atlantic shareholders, unfortunately. But nonetheless, a dominant theme in the lithium narrative in recent times is the emergence of African spodumene supply, in particular into China. Though much of that supply has been in private companies, there are very few ways that you could play the Africa spodumene theme publicly. And Atlantic, for all the reasons you're going to tell us again, it is a very good, pure play, low risk, low capex endeavor. Elections in the United States, as well as in Ghana, have impacted the broader lithium market and the Atlantic Lithium narrative, which will form part of today's update, as will the merger of Sayona Mining and Piedmont, with whom Atlantic has a joint venture agreement. For disclosure purposes, you should know that Rodney and I have been strategic advisors to and hold equity interests in Atlantic Lithium since 2021, and have also been advisors to and invested in Piedmont Lithium for many years. But we are not, of course, financial advisors. This video is for information purposes only, and nothing said here should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Note that a written summary of this interview will be published in the next edition of RK Equity's Lithium Ion Bull. Please register your email at rkequity.com if you'd like to receive this newsletter directly to your email box. And finally, please make sure to like this video, subscribe to Rockstock Channel, and leave a question or comment below. Atlantic Lithium is widely traded on 4 exchanges: the Australian Stock Exchange, London's AIM market, the US OTC, and most recently on the Ghana Stock Exchange. The ASX ticker symbol is A11, and London is ALL, where most of the trade takes place. The current share price is about 17.5 Australian cents, which is down 57% in the past year, and actually 48% year to date. Atlantic's current market cap is about 130 million Australian dollars, or 100 million US dollars. A capital raise last October at 23 cents, anchored by a $5 million investment by its largest shareholder, Assore, which owns now a bit over 30% of the company. And Atlantic has zero debt. The company has research coverage from a number of brokers in Australia, including Sam Catalona at Wilson Advisory and Reg Spencer of Canaccord, both of whom we've had here on Rockstock Channel, as well as some London brokers. If you'd like to receive any of this research, please email us at rockstockchannel@rkequity.com. You can follow Atlantic on X at Atlantic Lithium, and their website is atlanticlithium.com.au. And with that intro, welcome back, Keith Muller, to Rockstock Channel. And first and foremost, thank you for this great hat, which your team gave me at the Fast Markets event in July. And welcome back. And let's get into what's going on at Atlantic. And in particular, the lithium market's been weak generally, but, in the first 6 weeks of the year, I think there is some speculation or rumors or stock-specific issues that you'd like to address here with this video.
Certainly. Thanks, Howard. Thanks for having me back. So we've been tracking pretty well against lithium chemical prices since we commenced and we published our MRE a couple of years ago. But recently, probably since in beginning of January, what we've seen is quite a disparity between how our stock's behaving against other lithium producers. We think that is mainly related to the uncertainty that came with the elections that was held in Ghana over December. So there was election sort of the last week in December, and a new parliament has now been installed. New ministers has been appointed. So I think that uncertainty has certainly played a large role in the instability in our share price.
Could you speak specifically about the uncertainty? Because much of last year, the dynamic was you're waiting to get your final permit, you're waiting to get the sovereign wealth fund to invest, et cetera, and the parliamentary ratification as major. So what happened in the election, and why would the market, think the election should negatively impact Atlantic?
Certainly. So there was a change in government. So the minority party is now in the majority. So there's a whole new constitute of ministers being in place. All the agencies and government departments, all the heads has been dismissed and replaced with new people. So we have to form those relationships. It's not a case that we have to start from scratch again. So certainly from a parliamentary perspective, we've been talking to both sides of the aisle. But from the agency perspective, those are all new people that we need to meet, and we need to understand where they are positioned. So I think that is perhaps where the uncertainty comes from.
Okay. I mean, Atlantic was, like every resource project, a bit of a campaign dynamic. I mean, people talked about it. I mean, what is the posture of the current government, toward the project?
So we actually think with the new government in place, we'll have much better success in progressing to ratification. If you look at the way that our permitting has progressed, in a period of 18 months, since October 2023, when we received our mining lease, we were able to complete the majority of the permits required for breaking ground. So that includes our EPA permit, the mine operating permit, rezoning of land, water permits, and all those peripheral permits required. So the agencies operated well. But I think we saw in the last 6 months with the previous government, there was very little work being done, and there was a lot of electioneering going on. We certainly suffered as a result of that. I had the opportunity this week to meet with the new Honourable Minister of Lands and Natural Resources. And despite his optimism of hoping to push this through in this sitting, which is only until the 28th of March, I still think with a budget being released in Parliament on the 11th of March, a lot of time is going to be consumed by that. So realistically, I don't think we'll get it through in this sitting. Most likely we'll get it in April when they return. The minister has asked for a couple of briefing documents for us. So to a large extent, he wants to refamiliarize himself with it. He wants to understand the issues what blocked ratification previously. So that has been really positive. I think we also had an opportunity to meet with the finance minister a couple of weeks ago. So seeing the engagement that we are receiving from the new government is really giving us a lot of optimism to concluding on ratification very shortly.
Keith, good to have you back on. Just to recap on the project so everyone understands where you're at, you've got just under 37 million tons of resource. Over 80% of that is in measured and indicated, and a grade of 1.24% in the mining lease area. Is that correct?
That's right. And we spent the last 2 drilling campaigns that we concluded in 22 and 23 to really up that ratio of measured and indicated. We wanted to make sure, as we put a mine plan out, that we have a lot of confidence in that first couple of years. We also have, of that 80%, about 2.7 million. So that's about the first years of production. That's sitting in measured. So quite a very high confidence for us in that first 12 months of ore supply to the processing plant.
And Keith, if you can just outline all the product streams that you plan to produce at Ewoyaa.
Look, about 90 to 95% of the value generated at Ewoyaa is coming from spodumene concentrate. We do have a couple of other product streams. It's peripheral. It's not a main focus for us, but if I can expand on that, one of the secondary products that we'll be producing is a tailing stream. So that is the fines that's being rejected by the DMS. So we're intending to dry stack that and sell that as a low-grade material. It will have a grade of about 1.5%. So that will contribute between 5 and 10% of the revenue of the project, but we're treating that as a credit. The project is not sensitive to that, whether we sell that in the low-grade market. And of course, at the prices we have today, it's unlikely that you'll find an avenue for that to go to China. So it's likely that we'll only start seeing that come into play when prices are sort of north of $1,100 a ton. That's when that really comes into play. We also, of course, have the opportunity, Rodney, to stockpile that material long term and then put that through a flotation circuit later down the track. From a capital perspective, we don't want to do that right up front. There's another $50 to $60 million involved in constructing a flotation plant. So we want to do that with cash flow. But to be honest, if there's a market for it and we can sell it in a low-grade form, that probably makes more sense in the short to medium term. Longer term, we'll evaluate whether we want to put that through a flotation circuit. The benefits, of course, from putting it through a flotation circuit is it minimizes the logistics. We'll be able to upgrade that to a 5.5% concentrate as well.
Right. So, I mean, in your latest presentation, you've got a comparison table of operating costs versus peers. Can you please talk through the relative position of Ewoyaa and where it is on a relative cost position on a pre and post-production credits?
Sure. So what we did is we had a look at the quarterly reports from a couple of spodumene producers around the world, and we're sitting in about the second quartile. Difficult to compete to the likes of Greenbushes, but certainly very competitive compared to the other current producers in the market. So depending on how much secondary products, so that is the fines that I talked about, depending on how much we are selling the first 3 years of the project, we can see a C1 cash cost somewhere between $200 and $520 a ton, again, depending on the volume of that fines that we sell. And then, of course, later in the years, as the stripping ratio increases, we see a slight increase there. From an all-in sustaining perspective, we do have a large royalty at the moment, so there's a 10% royalty, so that attracts at $1,000 a ton, that attracts $100 per ton in your all-in sustaining cost, but from a C1, extremely competitive.
Right. And in terms of ownership, just if you can remind the listeners the split in ownership of the project.
So at the moment, Atlantic Lithium has 100% of the project. However, Piedmont Lithium has earned into 22.5. We haven't concluded on that transfer yet, but rightfully they own 22.5 with Atlantic the remainder.
Right. And I was just having a look in terms of your sort of portfolio of tenements. There seems to be some decent upside exploration potential to the west of Ewoyaa, but it looks like that ground is outside your current mining lease.
Yes, that's right. So the resource we have at the moment is only on the mining lease. So we've got a number of other tenements in Ghana, just over 500 square kilometers. We've deliberately slowed down our exploration activities. What we saw in the market in 2022 and 23, that companies weren't being rewarded for growing their resource whilst not in development. So we thought it was important to bring the project to production prior to expanding on that resource. And it's not only, of course, in Ghana. We also have tenements in Côte d'Ivoire. We obtained the exploration license there in October last year. And since then, we've done almost about 5,000 samples of soil. That's sitting in the labs at the moment. During that soil campaign, we stumbled upon a fair few bits of outcropping pegmatites, which looks like they contain spodumene. So we'll be releasing those results as soon as we get that back from the labs. We really like the tenements in Côte d'Ivoire for a couple of reasons. From an infrastructure perspective, it's closer to port than Ewoyaa. It's about 60 kilometers on a really well bitumen road. And then also we've got 100% ownership in Côte d'Ivoire as opposed to the dilution effect that we see in Ghana with the farming arrangement from Piedmont.
And in terms of Ewoyaa, you've got the EPA permit, the land rezoning, and the mine operating permit. What are the other milestones that are due for completion this year?
Look, from a shovel readiness perspective, those are all the permits that you require to break ground. However, we're very mindful that the ratification is outstanding. So from an FID perspective, we really want to see the FID come through. We want to see the ratification come through before we can make FID. So that's really the biggest one for us that's coming up. There's a couple of other peripheral permits like the export permit and land use and stuff like that. But really for now, we are ready to break ground from a permitting perspective. Just want to see ratification come through for FID.
And you've got projected 360,000 tons per year of spodumene concentrate. 180,000 is spoken for, assuming this Sayona-Piedmont comes through. What are your plans for the balance?
Yeah, well, when we constructed that deal in 2021 with Piedmont, the intent of the spodumene concentrate was for that to go to Piedmont's lithium hydroxide facility. At that stage, it wasn't defined, but later they defined that as Tennessee. Now that that plant has really been put on hold almost indefinitely, there's not an immediate offtake for the product that Sayona or the MergeCo will have access to. And there's also no discount on that product, unlike the deal that Piedmont had with NAL, where they had a ceiling price of 900. The product that they acquired from Atlantic is at market prices, so there's really very little margin to be made on selling that. So it's very likely that the project team, the JV between us and the MergeCo, might elect to put all the material up in the market, unless they have other offtake requirements that they need to satisfy. So the intention for us is to have a healthy split between long-term contracts and spot. We want to leave about 20% of all material for the spot market to do a bit of exploratory pricing on that. But let's see how it plays out with Sayona and the MergeCo of where they want to place that product.
And it brings us to an interesting part is what does the Sayona-Piedmont merger mean for the project?
Look, we first met with the Sayona guys. It's probably about a year ago now. It was February last year. Sylvain and his team was on site here with me at Ewoyaa. So they started this process, a good 12 months ago. Of course, we weren't in a position to speak about it back then. So it was very clear to us that Piedmont won't be in a position to make any decisions on Ewoyaa while the merger is going through, and certainly until the merger is completed, we're not expecting Piedmont to make a decision. We think that will fall with the MergeCo and will fall with Sayona. So the merger really means to us that we're getting to a conclusion where we will be in a position to put the prospect of FID to Sayona and see how they respond to that.
And in terms of the merger and the FID, what happens if you want to move forward and they don't?
Look, I think the preliminary discussions that we've had with Lucas, we're very much aligned. In terms of permitting, we're in full agreement on which permits we want to see, including ratification. I think one of the points we still have to wrestle out a bit is how counter-cyclical do we want to be in this investment? Obviously, from an Atlantic perspective, from a single asset, it is important for us to bring this into production. And we also have very little exposure due to the farming arrangement with Piedmont. The equity from our side to bring this project into development is very small. So we really need to understand where this fits in the pipeline of the projects that Sayona has available to them.
Right. And your sense of where Ewoyaa sits in their priority list of projects?
Yeah, look, I can't speak for Sayona, but what I think, Rodney, is if you look at what they have available at the moment, North Carolina and Mobland is not shovel ready. I think that's still a number of years away. So you're really left with brownfields expansion at NAL or investing into Ewoyaa. So from my perspective, if I evaluate the work that they've done at NAL, I think Sylvain and his team has done a great job to bring the operating cost to where it is at the moment. I think from the last quarterly, if I recall, it was something like, if you take consideration of inventory movement, somewhere between $760 and $780 a ton, with probably another 50-60 for sustaining capital. So you're sitting at mid 850s to low 800s. Comparing that to an investment into Ewoyaa with our low operating cost, I know where I would put my money. But what I would like to do is, let the MergeCo go through and let the board be informed and let them really understand where they want to be. But I think it's probably one of the best propositions for an immediate investment in the near future.
And Keith, where do things currently stand with your major shareholder, Assore?
Yeah, so look, Assore has been very active in the lithium space. This week they announced a further investment in Finland. So I think they put another $7 million in a junior explorer there. And as Howard mentioned, they were also cornerstone to our last cap raise. In fact, I don't think we've ever had a capital raise where they haven't participated. In this last one, they increased their stake from 27 to 30%. So they contributed almost 70% of the money that we raised in October. So they remain very supportive, and they're also very interested in lithium space.
And the current status of the money investment fund, planned investment of about, I think it's just under $28 million.
Yeah, so as I mentioned, a lot of the agencies in Ghana has undergone change in the leadership, and MIF wasn't excluded from that. So they appointed a new acting CEO probably about 3 weeks ago now. So I met with Jacinta earlier this week, and their whole board has been disbanded as well as the investment committee. So she wasn't really in a position to talk about when they will be able to make a decision here, because they have to reconstitute both the board and investment committee. However, she was very firm that they want to get to a point where they can make a decision and move on as soon as that board is reestablished.
And factoring and assuming that goes ahead and Sayona-Piedmont goes ahead, what is roughly Atlantic's share of the estimated funding requirement for project completion?
Sure. So we had a relook at the way that we want to finance the project. Previously, we contemplated a prepayment, but prepayment is nothing more than a fancy debt arrangement. So if we look at project finance, and this was really driven by Piedmont, they initiated this process, and after looking at it, we think we agree with them, both from a tax efficiency perspective and reducing the equity required. So if I run a scenario where we say the MergeCo completes their $70 million initial funding, as well as that $28 million from MIF, that $100 million, if you look at a 50-50 debt to equity financing arrangement, that enables us to get up to $200 million from a development cost perspective, or equally, if we look at a 60-40, which we think we might be able to do from the banks we've been talking to, that allows for up to a $250 million development cost. So what that means for Atlantic is, if these two strategic partners conclude, there's almost no capital or any equity that's required from the Atlantic perspective.
Okay, great. Howard?
Okay. So there's a lot of moving parts here. You're a very simple story in a lot of ways, right? What was it, 360,000 tons of spodumene that you will ultimately have a 50% share in. But, over the next number of months, there's parliamentary approval, and then there's Sayona MergeCo, and then so I'm just I'm thinking out loud here. Sayona is going to own 22.5% once MergeCo is complete, right? In order for them to earn in, they have to contribute another $70 million to the.
They've already contributed $5 million of that 70 sole funding, so it's an additional 65 that they need to put in.
Okay, and so what triggers their need to put in that 65 million? Because it's in my view, between North American Lithium, brownfield expansion, and Ewoyaa, Ewoyaa would come first, assuming you get ratification and other items before they get permitted to do a brownfield expansion. a timing perspective and also, I guess, just an economic, a project perspective. As a reminder, we interviewed Lucas Dow and Sylvain, who you said has done a great job at Sayona at North American Lithium, has a lot of experience in West Africa. And, so from an operational team perspective, I think there's a lot of, synergy here. But Sayona post MergeCo will have like 200 million in cash, and they were talking about having like a 2-year runway if lithium prices didn't rise, at all. But I'm just trying to understand what triggers them having to make this investment to 50%, and then what triggers final investment decision. Is it your decision alone, and then they're forced to make a decision, or is this like a joint decision, what to do?
Yeah. Look, we don't want to treat it like that in the sense that we want to force this upon Piedmont or the MergeCo. They've been great partners to date. To date, they've invested almost $37 million into the project. So the total $70 million we've spent in the ground, a big portion of that has come from them. So in terms of how the mechanics work, we have to jointly decide, and we've already reached agreement in terms of permitting and what we want to see there. It's really about the price. It's really about where do we want to see and where we want to pull the trigger on a recovery in the price. I think it's unlikely that if spodumene remains at 800 to 850, that we will be in a position to make FID on the current mine plan. We might have to revisit the mine plan and perhaps do a phase one with the lower stripping ratio pits first and maybe a slightly smaller throughput. However, if we see a change in pricing, again, the impediment for us to move forward is greater than what it is for the MergeCo. So, we don't want to force them into a corner, but certainly we need to get to a point in the near future if there's a significant change or an uplift in spodumene pricing, that we do need to get to a point to make a decision on this.
Okay, so you need to see an uptick in price. Do you have an idea of what, like if the price was 1,000, would you make an FID, or does it need to be 1,200, 1,500?
No, I think, Howard, there's two things there. There's one, it's around sentiment. So we want to see that things are moving. Where that price point is, I think if you would ask us and if you ask the MergeCo, we'd probably have a different view. I think they would probably want to see a slightly larger price than us. And that's mainly because, from our perspective, we've already paid the price in terms of equity distribution to them. So I think for us, we're sitting around a $980,000, $1,000. I don't know where the MergeCo will sit on this, but I would imagine that they would want to see something slightly higher. So it might be a position where we meet in the middle. We certainly don't want to disregard having a partner on this project. Again, as a single asset, the only project that we have, we think it's, from a risk perspective, better to have a partner on the first go.
Okay, and like Assore bid for you like 18 months ago, and then they bid twice, but then at a much higher price. So where does that stand? What are they waiting for? Why wouldn't they bid again now?
Look, I think there's two things there. When they bid previously, our expectations at that stage was that ratification was imminent, and we really felt that that was an opportunistic bid for where we were in progress. Unfortunately, the ratification didn't come as we expected. Look, we don't think they'll make another bid, mainly due to conversations with them. So we think that for now, Assore will stay at 30%, and I think they would want to see us develop the project and have the benefit of that large ownership in the company.
Okay, and you had a process for the prepay offtake last year. That was Macquarie was running that. I understood there was a lot of Chinese and non-Chinese, parties interested. One comment I heard, I don't know if it was from you or otherwise, was that China generally, obviously, have been going into Africa, but a lot of the African deposits haven't been drilled out in the way, properly in the way that Atlantic has. A lot of it was DSO or artisanal, and they just kind of went in and, so there was a thought process that among the projects out there that have actually done proper work, you were the last cab off the rank. That said, a lot of what's happening in Africa is private. We don't know what's happening with a lot of those projects. And China, for all we know, has not stopped making investments and advancing projects in Nigeria, Tanzania, wherever. What's your sense as a African about what's happening on the African continent? And there's Zijin apparently is moving forward with Monono, but we don't know.
Yes. So look, we haven't abandoned that offtake process. We had to slow it down a little bit because of the delay in ratification. Because one of the things that we recognised, and it's partially also related to the merger with Sayona and Piedmont, because one of the things that the offtake parties wanted to understand is they wanted to know what the ownership looks like, and they wanted to understand what other equity will come into the project. So with Piedmont not being in a position to make a decision on FID whilst they were going through this merger process, it was really difficult for us to put out to the off-takers exactly what the structure will be, because we really need that decision point from the MergeCo. So we are re-engaging now. The interest hasn't gone away, but we've probably just kept it at bay for the last 3 or 4 months, just so that we can see what happens with this merger. And then once we get to a decision point, it's almost an immediate re-engagement. There's still about 2 or 3 parties that remains very interested. And then there's the combination of what does what does the MergeCo want to do with their portion of the offtake. Now that we are looking at a project finance arrangement here, it's quite possible that we can put more material into this prepayment arrangement, which would look much more favorable for us, where we only were putting half of the concentrate into that prepayment.
Okay. And from a project finance perspective, you're mentioning prepay, but I've noticed the U.S. Export-Import Bank has announced some recent LOIs for lithium and other critical minerals project. And there's also the Development Finance Corp, which has done some loans, or they had a force majeure, I think, in Mozambique with Syra. But is there any dialogue with low-cost lenders like that in the U.S. or elsewhere?
There is, but there's competing interest there, right? So one thing that we also do recognize is if we do have funding from the DFC, it's unlikely that we'll have Chinese partners from a funding perspective. Certainly, offtake will still go where offtake is going to go. So we have been having conversations. This is mainly through the team at Piedmont. So when we came together and we really looked at how we're going to finance the project, the team at Piedmont has really been taking the charge in the US side, speaking to those institutions. And ourselves, we've been taking the charge here in Africa. So there's a lot of import-export banks interested in the African continent looking to assist. So really, depends on where the MergeCo sits will sort of determine which way we're going to go with this.
Okay, I saw that actually there's a project financing that Vulcan is putting together in Germany, and
Yes.
the lead for that is an Australian bank, right? So with Sayona, actually, the Sayona-Piedmont merger, the main listing is going to be in Australia, not the U.S. It's becoming more of an Australian, Brisbane-based story. Both of you are, connected in Australia. You have a lot of listings, I guess, across both of your companies. But anyway, okay, so there's a lot happening. The 10 million that you just raised, I mean, what's the cash burn? Like what's your runway? Because there's a lot kind of to play out here over the course of the next 6 to 12 months.
Maybe if I just touch on that point that you made of Vulcan, we've seen a lot of interest coming out of Europe as well. So when we commenced this offtake process, the reason that to some extent we disqualified a lot of those were, one of the criteria we had is we wanted to place this product with someone that's currently converting into lithium carbonate or hydroxide. So a lot of the European players were ambitious, and we didn't see an immediate runway for that. But things are changing very quickly. So that has now opened up the avenue to a European offtake as well. And of course, from an import-export bank in Europe, there's a lot of opportunity to get funding through that way. If I get to the question about the burn rate, Howard, we've done most of the heavy lifting. We've gone through 2 rounds of rationalization from a personnel perspective. Now that we've concluded the bulk of our exploration activity and the DFS is complete, we're left with very few people in Australia. In fact, in the Perth office, we're now sitting with only 4 people, including myself. So we've really concluded on all the heavy lifting. Cash burn rate at the moment, considering that Piedmont is still contributing 50% of all expenditures related to the project, we're burning about $350,000 to $400,000 per month at the moment.
$350 a month. Okay. Okay, so 10 million, and that's an Aussie number or a US dollar number?
That's in US dollar.
Okay, and you have like 7 million US dollars. Okay, so that's about a 2-year runway at the current burn rate. Okay, so another question, Keith. Just we've seen a lot of M&A over the course of our 15 years in lithium, and I have thought, or the Sayona-Piedmont merger was very obvious, but you had to remember, Galaxy and Orocobre, and then Orocobre Livent, and then Arcadium, Rio Tinto. It seems I've thought like Piedmont Sayona, is one step, and then MergeCo, and Atlantic could be another step, and then a further step, sell to Rio or some other bigger company. And I'm sure there have been dialogues along that way. Any thoughts on that? And then I have another question, which I did just remember, is that when you cut your deal on the royalty and the like, the economics of all of that, we could remind investors what that was, but the lithium price was much higher. And I just wanted, does the new government in the new price environment, is there any scope to change the economics of the project? So if you could just address those 2 questions,
Sure. Look, I think that's a very good question in terms of where we're sitting with the royalties. And there's been some speculation that the new government wants to relook at the deal, but I can tell you that is absolutely not true. If anything, we've been talking about when we signed the ML in, what was that, October 2023, spodumene prices were somewhere around, I think it was $2,800 a ton. But when we started negotiations in February that year, we were sitting at $4,000 a ton. So there was a lot of excitement building up about the prospects of what this can be. And to be honest, if it's $4,000 a ton, sure, 10% is fine. But where we're sitting today and where the forecasts are sitting in the near term, consensus pricing for us long term, we're looking to operate a mine at between $1,300 and $1,400 a ton. To be honest, at those rates, it doesn't make sense to have a 10% royalty stream as we have an agreement at the moment. What we are working with the government is looking at perhaps a tiered system. So it would make sense to us to have a lower royalty rate at these suppressed prices, and certainly when there's super profits, when the price goes above 2,000, we're more than happy to share on the windfall. So that's what we're talking about at the moment. Whether we're going to be successful or not, that we also have to trade off. If we re-enter in negotiations, how is that going to affect our ratification? So is ratification more important than a better deal? Depends on how quick the price responds. If the price remains flat as it is at the moment, it's probably a better proposition for us to renegotiate on royalties. And then equally, if the price turns very quickly, then perhaps ratification is more important. And then, of course, there's how will the new government react to this? How will they be looked upon if they change the deal what was done under the previous regime? But I think they've been very pragmatic in conversation so far. They understand where the prices were when this was done. And certainly if there's a tiered royalty system, that makes a lot of sense for both parties. It protects us against the downside, and it keeps the mine running. And equally, we share on the benefit as the price goes up. So we're hoping we can do something there, Howard. But we don't want to promise anything just yet.
Well,
We'll
good luck.
see how that goes. Yes.
Yeah.
And then look, in terms of, you mentioned, and look, I've heard that as well. Would that be the next step with the MergeCo Sayona then acquiring or merging with Atlantic Lithium? We've had no conversation along those lines. Since the merger was announced, we've been speaking with Lucas quite regularly, and it was all around how do we take this project forward and what their views are on FID and our views. So that's been very constructive. We certainly haven't had any talks about any further M&A activity. But look, nothing is out of the question, and it doesn't necessarily have to be that way. There's a number of other smaller players that would also make perfect sense. But at the moment, our focus is to get to FID and bring the project into production.
Okay. And the final question I just remembered was, Morocco and Saudi Arabia, have come up as destinations, not only Europe. So any thoughts on any color you could provide on what's happening in those regions?
Yes, so perhaps if I address Morocco first, that would make a lot of sense with feedstock coming out of Ewoyaa. So we have been talking to those parties. We like the idea, but again, that development is dependent on the prevailing markets, and completion of construction could be a number of years. So you still need to find a home for your material in the interim. I think I'm excited about what's happening in Saudi. Earlier this year, Neil and myself went to Riyadh for the conference day, and we had conversation. There's about 4 parties that's looking to do a conversion plant in Saudi. So we've been talking to all 4 of those. We don't think all 4 will go ahead. We think there would maybe be 1, maybe 2 at most. So we certainly, and from acquiring feedstock, that's one of the first things you have to secure if you contemplate a converter. So with our feedstock still available, that makes us a prime target for conversation and negotiations with those. But again, it's about timing. It's about whether that comes to fruition in the near term or whether that is a longer term prospect.
Could you just, I don't know a lot about what's happening in Saudi Arabia or Morocco, but it's come up like a few times. So you said there are 4 groups in there. Like, what's the logic for Saudi Arabia? I think European Lithium, it's now called CRML, and they have something in Greenland. They have some ostensible arrangement there that Saudi is going to finance something, but and they do have spodumene supply, but we haven't seen the Saudis writing checks. So who are these groups? How serious are they really? And what's the logic, for
Sure,
Saudi Arabia?
sure. So what the driver is Saudi has this concept of Vision 2030, where they want to divest a number of the GDP to make sure that they're not reliant on oil and gas. So they've certainly been doing this with other commodities, with aluminium specifically. And there's large industrial parks, so it makes sense from securing sulfuric acid. That is readily available. Power is relatively cheap there. And of course, funding is readily available in Saudi as well. So I think that is the rationale why they are looking at expanding there. In terms of how serious I think these groups are, a few of the players are current producers or current converters, so I think they are very serious. And then, of course, there's a couple of aspirational producers in there as well. So, whether they get off, I'm not sure, not convinced. But certainly, those entities that's looking to move out of China, I think they have a really good prospect of actually making something there.
Okay, so it's basically Chinese converters that want, non-Chinese conversion.
Yes.
Is Saudi a free trade agreement?
I'm not sure
With
how I'm not sure how they
yeah,
sit with
I know
the
Morocco. I know Morocco is. I'm not sure
Morocco
about
is.
Saudi.
Yeah.
Okay, but basically there's cheap gas and it's proximate to other locations. The Chinese, can do business, and if they're just if Saudi's open for business, they can do it. All right, so that makes sense. So that sounds like a real possibility. Okay, so there's a lot of opportunities for you to do something ex-China. Lithium is filled with booms and busts. We're in a bust, but there's opportunity here. You're 100 million market cap at one point. The MPV. I don't know what numbers. This is potentially $1 billion project, right? You have like a half share of it ultimately, or more. Who knows? And there's exploration upside. You haven't explored for, I think, only 13% of your entire tenements. So there's a lot of opportunity, contained within Atlantic. For all our viewers here, yeah, it is down, 50% year to date, and you have, as we just described, 2-year cash runway. So a lot can change. From 18 months ago, you're at an all-time high, I think. 18 months from now, it's a long way to the top, according to ACDC, as I started the year. So let's leave it at that. Thank you very much, Keith, for this great update, and good luck, and hope to see you soon.
Thanks, Howard. I'll see you at PDAC, mate.
All right. Yeah, I'll be there for sure.